Good day, grade 12 learners. Welcome to today's accounting lesson. Paddington Zinzombe is my name and I am your presenter for the day. Please take note, the lesson is being brought to you by the Gauteng Department of Education in collaboration with Sci-Bono Discovery Center. Now, today we are going to be looking into our next topic, bank reconciliation statement. So you are going to see we are now looking into reconciliation. And the first reconciliation we are going to look into is the bank reconciliation statement. Now, these are the objectives for the day. We hope by the end of this lesson, you should be able to understand the purpose of a bank reconciliation statement. And then the concept unique to bank reconciliations, you need to be able to reconcile the cash journals to the bank statement. And then we are going to bring in a little bit of analysis and interpretation of bank statements and bank reconciliation statements. And then lastly, we are going to look into internal control purposes related to cash. Remember, we are dealing with bank, business, cash received, cash paid in relation to the bank. So we are going to need to know the internal controls that are unique to dealing with cash. Now, the first thing that we are going to just point out to start with is the reconciliation types that we have. We are specifically looking into a bank reconciliation statement today, but remember we also do have debtors reconciliations as well as creditors reconciliations. In our next sessions, we are going to look into debtors and creditors reconciliations. Now, if you check here, when it comes to reconciliation, there are records that have been made by the business. And there are also records that are made by external parties that the business is dealing with. So at the end of a period, they send us a statement. We compare with our records as the business. And if there is any difference between those, then there is need for reconciliation. So reconciliation takes away the differences generally. Now, let's look into bank reconciliation. Now, bank reconciliation is a process of comparing the financial records of the business. We are looking into our journals, CRJ, CPJ, and the transfer to the general journal in the case of a bank account. We are comparing now our balance coming from there to the statement received from the bank. So check here. The business is busy preparing their records in the form of journals and transferring to the ledger. Now, if we are to discover that our bank balance according to our books is 10,000, when we receive the statement, we also expect to see 10,000 on the bank statement. Now, what if the bank statement is saying we have got 15,000? Are we just going to relax and be happy? If we are to be relaxed and happy, then it means we must also be relaxed and happy when the statement says your balance is only minus 2,000. So when there is a difference between our records as a business and the bank records, then there is need for reconciliation. And this process, we call it bank reconciliation. What is the purpose of reconciling? Now, reconciliation identifies where there are errors. It identifies where there are omissions. Remember, an error is a mistake, but an omission is when information have not been recorded. And remember, we can omit some information unaware. And then we also try to identify where there is fraud. Fraud is deliberate manipulation of accounting information, deliberate errors of if there exists such a thing, deliberate mistakes. So these are deliberate actions by employees in order to take something that do not belong to them. Now, another thing is we want to verify the accuracy of all the transactions that have been recorded. Remember, the information that is being used to record in our books and the information that the bank is also using depends on our common information. So if any one of the two parties make a mistake, then we can be able to verify who is accurate in this case. So we verify the accuracy of our records. Check here. This is the reconciliation process. The bank is recording everything on the bank statement. The business is also recording everything, every cash that it is taking to the bank as well as it is taking out of the bank. They are recording on their CRJ and the CPJ. Now, if there are any difference between these, then the process of reconciliation kicks in. So reconciliation explains why there are differences between the bank records and the business records. Bank reconciliations. Now we move on to the concept that we are going to be looking into and seeing a lot of times as we are dealing with our bank reconciliations. We are going to see concepts such as bank overdraft, deposit slip, bank charges, interest on current account, debit order, interest on overdraft, EFT, deposits, stop order, current bank account. These are the concepts that we are going to be seeing, which most of us have already been in touch with such concept last year in grade 11. But anyway, I am not going to take time and explain each and every one of them as of now, but as we go, you are going to see that we are going to bring them on. And when they do come up, then I am also going to give you a brief explanation on those. Please take note of these concepts. Now, let's look into a comparison of how information appears on the business records versus on the bank records. So we are having records of the business and records of the bank. Now, when we are in the business, cash transactions are recorded in journals, and these are the CRJ and the CPJ. Those are the two journals in which we are recording all our cash receipts as well as cash payments. Now, after concluding these, we post to the general ledger and we post this to the bank account. So check in. The final figure, the final total of the CRJ goes to the bank. The final total of the CPJ goes to the bank account. And these two, they are going to merge to bring us a balance that the bank has according to our business records. And then on the other side now, when we look into the records of the bank, the bank records everything on the bank statement. Now, the bank sends a statement of accounts to the business showing the record of all transactions that have been debited and credited by the bank. In the end, they are also going to have a balance, which we are going to call the balance as per bank statement. So there we are, another balance on our bank account and another balance on our bank statement. They must be similar. If they are not similar, what do? Reconciliation is the answer. Now, let's check also on the records of the business. They're saying cash received and deposited is reflected on the debit side of the bank account. So cash received and deposited is cash recorded in the CRJ. So the CRJ total is taken to the bank account and it occupies the debit side of the bank account. Are we okay with that? Cash received, recorded in the CRJ, transferred to the bank account, and it occupies the debit side of our bank account. Good. Now, let's see what happens when we are at the bank. The bank credits all the deposits made by the business. Oh, check what's happening here. We are debiting in our bank account. The bank is crediting on the bank statement. Usually, accounting people say the bank statement is a mirror image of the bank account. What does that mean? Check something that happens when you get to the mirror. I think a mirror sometimes lies. What do I mean? Check. When you go to the mirror and you hold your left-hand side ear, check what happens to the person in the mirror. That person will hold the right-hand one. That's what happened. So in other words, I'm just saying what we debit in the bank account is credited when it comes to the bank statement. Please take note. What we debit in the bank account is credited when it comes to the bank statement. Okay, let's go to the payments. According to the business records, payments made by the business are reflected on the credit side of the bank account. Now, payments on the credit side. But when you go to the bank records, payments, withdrawals, debit orders, any money that is going out of the bank account on the bank statement that are made by the business are recorded on the debit side of the bank statement. Okay, on the bank account, deposits, debit, withdrawals, credit on the bank account. But when you go to the bank statement, deposits, credit, withdrawals, debit, mirror image. Let's move on to how do the issue of favorable and unfavorable is affected on the bank side and as well as on the business side. Now, please take note. We have got this called unfavorable balance. You need to understand this. We refer to it as a bank overdraft. Now, businesses, because they are always constantly dealing with money, they may face cash flow problems. They may face liquidity problems. And when that times happens, they can go to the bank and make an arrangement. The arrangement allows the business to withdraw more money than they have deposited in the account. And then when that happens, we call it a bank overdraft. Now, that is an unfavorable balance. So instead of your balance going to 0 and becomes not functional, it allows you to go to minus. So it becomes unfavorable and we call it a bank overdraft. Now, you need to know now, when we are dealing with a bank overdraft, according to the records of the business, now, they are recorded as a credit balance. Remember, it is now a liability. So they are recorded on the credit side of the bank account as a credit balance. And now, it means now we are owing the bank. It's now a liability and the balance becomes credit. And then what happens when money is taken out of an account which is already having a negative balance? Now, any money taken out of the account increases the overdraft. Remember, it's already negative. So we are going towards even bigger negative figures. So it means if we were having a number line, we are going towards the left even further. Now, what happens on the side of the bank? When we are looking into the records of the bank, when we are having an overdraft, it is recorded as a debit balance. In the bank account, it's recorded as a credit because it's a liability. On the bank statement, it's recorded as a debit. Now, it means now we have overdrawn our accounts. Remember, a credit balance in the bank statement means we are having money. It means a positive. But when it becomes debit, it means it's an overdraft. And then, whenever money is withdrawn from this account on the statement, the balance increases. Remember, it's already negative. Any other negative transaction increases that figure. But if money is deposited into the account, we are reducing how much we owe. It means it is going to be reduced. Very important to know how our increase and decrease affects our bank overdraft, because how it affects our bank overdraft is exactly opposite to how it affects a favorable bank balance. Very important for you to take note. We are going to deal with such situations if we get to a scenario where they are, and we can be able to show how it works. Now, let's move on to our first activity for the day. Now, here we are preparing a bank reconciliation statement, but we do not just jump and start preparing a bank reconciliation statement. So you are going to see that every time we are given a business where we are preparing a bank reconciliation statement, we do follow simple steps. So they will say, 1, complete the cash receipts journal and the cash payment journal. In simple terms, complete the journals that are prepared by the business, CRJ and CPJ. Now, why are we completing these statements? Remember, we might have transactions which have been recorded by the bank on the bank statement, which the business have not yet captured because of a number of reasons. So it means we need to update our CRJ and CPJ before we go anywhere. And then after updating, we are going to have the correct totals. Now, according to the CRJ and the CPJ, we must transfer those totals to the ledger, and we are transferring this to our bank account. So you see that number 2, they will ask you to prepare the bank account. Now, after that, we get to preparing the bank reconciliation statement. Now, what are we doing now by preparing the bank reconciliation statement? We are saying there are some items which have been recorded in our journals, but they are missing when it comes to the bank statement. And remember, we are not the ones who are preparing the bank statement. It is being prepared by the bank. So we don't have access to correct the bank statement. So we are going to have our own extension of the bank statement in the form of bank reconciliation statement. So our bank reconciliation statement, it's our own continuation of the bank statement, so that we can check and see where we had some omissions, some errors, some mistakes, some fraud taking place, and we correct such. Now, according to this question, we are now given information. I'm going to go through all the information at once. When we get to the end, I am now going to go through the statements one after the other. And in that case, I will bring only information that affect that statement, so that at least we can see where and how we go about recording such information. So let's check. It says here, according to the information, on 1 March 2021, which is the start of the month, a bank account in the general ledger reflected an unfavorable balance of 15,200. So this means it is a bank overdraft. And this is an opening balance of our bank account. So this goes to the bank account. Very important. Now, we move on to other information. It says the provisional totals from the cash journals on 31 March 2021. Remember, 31 March is the end of the month. So these are the totals that we are finding in our cash journals, which are CRJ and CPJ. But these figures are not taking into consideration some omissions, some errors, some information that might have appeared on the bank statement but have not yet appeared on this journal. So we are going to update this information. But check here. In our CRJ, we are having a total of 46,200 already before the update. And then in our CPJ, we are having a total of 74,300. Now, this information now is where we are starting from when we are looking at the bank records. And then we carry it over going on to the bank reconciliation statement. Now, information C states this. The following information on the March 2021 bank statement received. On the March 2021 bank statement received from BR Bank did not appear. I want you to underline this. This information that they are giving us now did not appear where? In the March cash journals. So when information is not appearing in the journals, it means that information must be taken to the journals. Let me say this again. If the information is not appearing in our journals, it means that information must go to our journals. Very important. But please take note also. Sometimes we might have a figure or two that is found on the bank statement and is not appearing in our cash journals because the bank made a mistake and recorded a figure that they should not have recorded. And if such have happened, it means it is a mistake by the bank, and a mistake by the bank can only be corrected by the bank. So therefore, they will just promise us we are going to correct it. Tina, for now, we are going to correct it in our bank reconciliation statement. Remember, we said a bank reconciliation statement is our extension of the bank statement that we cannot go to the bank and correct for them. So we are using our bank reconciliation statement to make all corrections on any mistakes that have been made by the bank. Information, according to them, that appeared on the bank statement received and did not appear in the cash journals. So it means this information must go to the cash journals. That's the way I see it. That's the way you must see it. Okay, let's check. What information is that? Now, to start with, they are debit orders. Now, debit orders, these are monies that are taken out of our bank account because we have given the bank an instruction to make payments on our behalf. Now, when a business have got regular payments that they are always paying monthly, for them not to forget, they can just go to the bank and give them an instruction to say, Mr. Bank, we are paying Nala municipality every month 1,500 for water and electricity. So make that payment for us. We are paying our insurers 2,000 rands. every month. Please make that payment for us. Now, what happens is the bank pays those amounts. And when the business receives the bank statement, that's when we are going to be having a bank statement as our source document to say, oh, these payments were actually made. And now having the source document, we can record now in our journals. So that's why these items appeared on the bank statement, but they did not appear on the CRJ or CPJ. And in this case, these are payments or receipts. So the first one, it's a payment for water and electricity. The second one is a payment for insurance, but please take note on this one. 1,500 is for the private residence of the owner. So when a business pays anything on behalf of the owner, that is drawings. So it means they paid a total of 6,000, but 4,500 is insurance for the business. But the 1,500 is not a business expense. It is being paid on behalf of the owner, and because of that, it is referred to as drawings. And then also we have got an investment that matured, and they're saying here, including interest for the year, which means there is interest in this 10,200, and there is also the principal amount in this 10,200. When they are being recorded, we cannot record them as one. There is need for us to split and make sure that we record the fixed deposit, the investment on its own, and the interest on the investment on its own, because it's interest income. Okay? They also indicated this: EFTs, cash handling fees, service fees, as well as interest on unfavorable balance. What I know, all these are payments that are made to the bank. These are payments made to the bank. So we are paying the bank. But there is a difference between these three amounts and this one. Remember, even when we're dealing with our income statement, the prefix interest means something else. The minute they say interest, it changes the game. The same applies here. So the first three can be referred to as bank charges. They are an operating expense to the business. But interest, it is a finance cost to the business. And because we are having principles that governs us, we cannot mix these two. We cannot mix these two. We'll explain further as we are recording. And then they are also saying there was a deposit from a debtor, P. Jacobs, 4,500 in settlement of his account. We are receiving money from a debtor. And then the bookkeeper forgot to enter the EFT to Nauri Enterprises 9,600 for rent. The bookkeeper forgot, an omission. So we need to record this. And then a deposit of 8,000 reflected on the business bank statement. This does not relate to the business and must be corrected by the bank. So this is a bank mistake. So it must be corrected by the bank. And remember, the bank is not here to correct their statement. So what do? We are going to correct for them on the bank reconciliation statement. Now, this was a deposit. It means to correct, we must withdraw this money in a way. Let's see how we go about it. And then we are given information D, and it says, the following information for March in March cash journals. Now, this is in cash journals. Did not appear on the bank statement. So it means now this information that we are going to see now It is there already in our cash journals, but the information is not appearing on the bank statement. So it means now it should go on to appear on the bank statement. But remember, we are not preparing the bank statement. We can only do that in the form of taking this information to the bank reconciliation statement. So this information belongs now to the bank reconciliation statement. Now, what is that? An outstanding deposit as well as outstanding EFTs. Now, what is an outstanding deposit? An outstanding deposit is cash that have been received by the business and recorded on the CRJ. And then that cash, the next step is to be taken to the bank. So let's assume we are taking this deposit to the bank on the 28th, but the bank meanwhile have already sent us a statement on the 27th. What does that mean? It means that deposit is not going to appear on the bank statement, but it's already appearing in our journals. So it means it is outstanding, on its way from the business to the bank, somewhere in between. And what are we expecting? When we receive our bank statement in the next month, we expect to see that figure first. To say, okay, that 10,000 now appears. If that happens, everything is good. But let's assume because of something else that happened, we receive next month's bank reconciliation statement and that figure still is not there on the bank on the bank statement. It means now something happened to this cash on its way to the bank. It never arrived at the bank. So we need to investigate, establish, and deal with such accordingly. Now, we have got two EFTs, electronic funds transfers. So these are transfers that we are making as payments to certain individuals. So these, they are still outstanding. They have not yet reflected on our bank statement. So we are going to have them as outstanding EFTs. They are just like the outstanding deposit. Now, the last item there says the balance according to the bank statement on 31 March 2021 is question mark rands. And we are not sure. But we are going to be able to find it when we get to the statements. So for now, let's deal with our statements one after the other, starting with our CRJ. Now, to complete our CRJ, let's look into information that affects our CRJ. The first thing that we are given is here, the debit orders. They are saying here when it comes to AG investments, we received 10,200, and this is an investment that matured and including the interest that they are giving us. So we need to separate interest from the investment. So if you remember, our investment is always our 100%. And our interest, according to what they are giving us, is 13.333%. Remember, it's 3 recurring, right? A third, it's 0.3333 recurring. So we can say it is 13.333%. So it therefore means this 10,200 figure is equal to 113.333%. So it therefore means if we are having this, we want to find the 100 or we want to find the 13.3. Now, you remember what we said last time, the UK method, unknown over the known times the figure that we are given. So we are looking for 100 over 113 because this is what we know. This is what we are given. On your calculator, if you want to have an accurate figure, when it's recurring, just keep on giving us some threes there. And then when you do this, and then we multiply by 10,200, and you are going to see that it gives us 9,000. What does that mean? It means our investment was 9,000, and the extra 1,200 that we are receiving is for interest. Now, let's see how it is going to appear when we record. Now, when we record in our cash receipts journal, it's going to appear like this. The source document, it's our bank statement. The date is on the 31st. And then total, the details. Please take note. The details is like they are asking you, who are we receiving money from? So this should be a name. This should be a name of a person that is giving us money, or the name of the organization that is giving us money. But please remember, it has to be a name of whoever is giving us money. The name of the person from which, or the organization from which we are receiving the cash. So we check how much are we receiving? 10,200. And then now, we cannot record 10,200 when it comes to the sundry part. We are going to separate it, because this amount, we want to answer the question, what is this money for all? Why are we receiving this money? So we need to specify. So we are going to say the 9,000 is an investment from AG Investments. So that's the money that we invested and it's coming back. And what about the 1,200? This is interest on investment. So we have managed to separate the two now. Of course, we are receiving 10,200, but what is the 10,200 for? 9,000 is for an investment that we are getting back, and 1,200 is for interest on that investment. Good. Now, we check the next adjustment. It says a deposit from a debtor P. Jacobs, 4,500 in settlement of his account. So it means a debtor is paying us. How do we go about recording that? Bank statement is our source document, the date, the 31st, because we are doing this at the end of the month, and the name of the person from which we are receiving money, it's P. Jacobs. Remember, the first detail gives us the name. And then how much? 4,500. We take it to the bank, and then in the sundries column, we are going to say this is 4,500, and from where? Debtors control, because a debtor is settling an account. Remember, anything that affects our debtors, then it goes to the debtors control account. Now, what are we seeing here? There we are. Remember this, the first total was the one that was given as provisional total. So it's already there. It's already given to us. Information B, provisional total. So, and if you check according to this, it was already entered for us in this answer booklet. And then we entered these transactions that we are given now. And when we add the total now, in this column, we add everything. And then we are going to get 60,900. Please take note, one mistake that I've always seen. Learners, because they are the ones that they recorded these two figures, they will remember to add only those two figures, and they forget to add the figure that is already typed in on their answer sheet. Remember, we must total everything, including the total that we are finding on our answer sheet. So the total now that we have is 60,900. Please take note, this goes where? To the bank account. The reason why we are updating this is to find the figure that we should total and transfer to our bank account. So one down. Our next port of call is the CPJ. Now, according to the information, the other two debit orders that we have not yet dealt with are payments. The first one is a payment to Nala Municipality for water and electricity. So it's straightforward. We are going to record source document. It's the balance sheet, bank statement, the date 31. Nala Municipality is the name of who we are paying, the name of the organization that we are paying. And we are paying 1,500, and it's what for what? Water and electricity. The last detail is why are we paying this money? What is it for? And then the next transaction, we are paying Viseca, and 6,000 is the total amount that we are paying for insurance. This is an insurance company. But now, there are two things here. The insurance premium for the business and the 1,500 that we said it's for the owner, and we said whenever it is something to do with the owner, it is called what? Drawings. So when we record, we separate the 6,000 now into two. The 4,500 is for insurance because it's a business expense. What about the 1,500? It's drawings because we are paying something that is not a business expense. It's a personal expense, and we call it drawings. Next, we are also given that the bookkeeper forgot to enter the EFT to now the enterprises for 9,600 for monthly rent. We are paying monthly rent, and the bookkeeper forgot to record this. So let's help the bookkeeper, boys and girls. Let's record for the bookkeeper. So it is going to appear also together with these. Check these now. These four, I said they are payments that are being made to the bank. But I said we are going to separate the three and this one. But now what we do, we check how much is the total for all of this, and we put it aside. And then we separate. The first three are going to be recorded as bank charges. These are just a normal expense. But this one now, it is interest on favorable balance. So it has to be recorded as such because it is not just a normal operating expense. So it appears now, let's start with the first one for now, the enterprises that was forgotten by the bookkeeper. Who are we paying? We specify 9,600. We repeat the amount. And because it is for one thing that we know, we are going to indicate that it is rent expense. But when it comes to the amount that follows now, these payments, we are going to say the source is the bank statement though, and the date is given. Who are we paying? We are paying BR Bank. None. It's a fact. How much are we paying BR Bank? It's going to be 610, which is the total of all these four amounts brought together. Now, after that, now we are going to add the first three, and we are going to say this is 490, and these are bank charges. And we are going to bring the 120 on its own because it is interest on overdraft. That's what the materiality principle specifies. Because interest is a material aspect, no matter how small the figure is, we must show it separately, not with everything else, on its own. Now, we check also any other items. There we are. So we are bringing everything together. Now you can see how it appears now. We are having the total from our CPJ, which was the provisional totals, and then we enter all the figures and amounts as we requested, and then after that we are going to add the amounts starting with the 74,300, which is already on your answer sheet when you received it to start the exam, and then you get to the total, and the total figure is 92,010. Please take note, this goes to our bank account. Very important. So remember, from the CRJ, we have got a figure, total. We said it's going to the bank account. From the CPJ, we have got a figure, the total. We said it's going to the bank account. Now, let's see how it appears when it gets to the bank account. So they are saying prepare the bank account as the next item. But remember, information item A, it was saying the bank account in the general ledger on the first day of the month was having an unfavorable balance of 15,200. And we said this is an overdraft, right? So let's see how it appears when we are taking it to the bank account. An overdraft is a liability. And a liability is going to be a credit balance. So we are going to start by bringing down the 15,200 on the first day of the month. That is the only figure that we are having then. After that now, we are going to check from our CRJ that total. You still remember it, 60,900. And then we also check from our CPJ the total. You still remember it, 92,010. After this, what is left is just balancing off the account. Remember, how do we balance off an account? We check which side is bigger. Remember, this amount is not there. So we check 15,200 plus 92,010. It gives us 107,210. For this account to balance, it should be the same on the other side. So we take it there. And then we are going to check. We only have got 60,900 here. So it means there is a figure that we must find to make it balance. So that's a balancing figure. So that's how we get our 46,310. After having it, remember every balance that is carried down should be brought down when the next month starts. That is our bank account. So what are we having now? This is our balance, our new balance according to the bank account. Now this figure must now go to the bank statement. Remember, we are not having a bank statement here, so we take it to the bank reconciliation statement. Very important. So this is the result of what we are doing in the bank account, but it's not going to end here. We take it now to the bank reconciliation statement. So the next thing that we are doing now is preparation of the bank reconciliation statement. Let's see what it looks like. They're saying, according to information D, you still remember they said, the following information in the March cash journals did not appear on the bank statement. So this information is still outstanding on the bank statement. So we must take it to the bank reconciliation statement. Now let's start with the outstanding deposit. How does it appear on the bank reconciliation statement? Remember, they said the balance according to the bank statement is not known, R question mark. So it means we don't know yet. So we leave that one for now. But when it comes to our outstanding deposit, check what they're saying here. We credit outstanding deposit. It's a command to us, boys and girls, that we should record this on the credit side. So we are just taking the 23,400 and we are recording it on the credit side because we have been commanded to credit outstanding deposit. Don't forget, it's just a command. Next, still having that information, we have got these two outstanding EFTs. How are they going to affect our BRS? Now, the first two items, we already dealt with them. So let's concentrate on the outstanding EFTs. Check the command on outstanding EFTs. It is debit outstanding EFTs. And we are having two of them, EFT 120 and EFT 125. Now, because the command was debit, it means that we must record these on the debit column. We are going to take the debit column because that's the command. Remember, the command on outstanding deposit is credit. So we took it to the credit. When it says debit, we debit. Remember, that's the format. We can't do anything or fight it. It's what we have got to do. Let's just oblige and do the correct thing. Now, the next thing is that deposit. You still remember, they said a deposit of 8,000 was reflected on the business bank statement. This deposit does not relate to the business and must be corrected by the bank. So the business, by mistake, deposited money into our account. We mustn't just celebrate. It's not our money, so they must take it out of our account. So it is a deposit made into our account by mistake. How is it going to be corrected? Remember, deposits are always made on the credit side. So if it is an amount that have been wrongly credited, the only way to correct is to go to the other side. That's the reason why we are going to debit amount wrongly credited. Credited by mistake, deposited by mistake. Let's take it out of our account. And then that's how it is going to appear. Now, after that, we are done with our bank reconciliation statement. Check here. Remember here we had said there is no amount, right? So there is nothing according to us for now. So we are having all these other information. And remember where this one is coming from. It's coming from our bank account. And why are we taking it to the credit? Because even on the bank account, the balance was the credit. Remember, on the bank account, it was something like this, and the balance brought down, it came on to the credit side here. So it therefore means now this implies a credit balance. And as long as it's a credit balance, when we transfer it, we also transfer it to the credit side of the BRS. We take it as it is to the BRS. Now, what does that mean now? We are having two amounts here, but these amounts are bigger than a total of all these other amounts on the debit side. So what do we do now? We are going to use the total of the bigger side. So the total that is bigger is on the credit side, and it's giving us 69,710. We use the same total as the total of our debit side. And then now we are going backwards. We are going to say 69,710 minus 8,000 minus 4,790 minus 9,220, and it is going to give us 47,200. So it means we are going to get it as a balancing figure. We were not given, so we must find it. And that's how we find it. Done, dusted when it comes to activity number 1. Let's dive into activity number 2 so that we can see how this is always structured and how they relate. So when we are doing activity number 2, I want you to take note of the similarities that we have been seeing when we're dealing with activity number 1. Because the questions when it comes to BRS, they are plus and minus the same. So the differences and the variances are very little. And when you practice and you practice well, you always get all your marks when it comes to this section. And when that happens, we are on our way to getting totals and distinctions at the end of the year. Activity number 2. Now, it starts with something just to check if we understood much. Bank charges is a form of EFT. Is bank charges a form of EFT? True or false? True or false? Okay, I got your answer. A debit balance on the bank statement is a positive balance. Debit balance, positive balance. Remember, the bank account, the bank statement, mirror image, the other side, overdraft, favorable balance. How do they relate? You need to understand that if you don't, we are still going to be having problems in answering such TISA questions. Interest credited on the bank statement is recorded in the CRJ. Interest credited on the bank statement is recorded in the CRJ. Now, remember when we credit the bank statement, are we depositing or we are withdrawing? What are we doing by crediting the bank statement? Remember, credit side, deposit. And then when it comes to the debit side, withdrawals. That is in the bank statement. So can we say interest credited on the bank statement is recorded in the CRJ? I guess so. So check here. Our expected responses are true, false, and true. It's true that EFTs, bank charges is a form of EFT, it's true. But at the same time, debit balance on the bank statement is a positive. No, it is a positive on the bank account, but it's negative. It's an overdraft when it comes to the bank statement. Bank statement. Interest credited on the bank statement is recorded in the CRJ. That's true. Remember, interest on when credited, it means it's deposited. Therefore, it translates to the CRJ. Now, let's get down into the question. One thing that is similar. What are we required to do? What were we required to do in question 1? And what are they requiring us to do in question 2? Pretty the same. Standard. You are supposed to complete the cash journals, CRJ, CPJ. After that, post to the bank account, which means we must prepare the bank account itself. After that, prepare the bank reconciliation statement. So what we did in question 1, it's what we are doing now, and that's what they are going to ask you to do in most questions when they say you are doing bank reconciliations. A good thing. Now, information. Now, extract from the bank reconciliation statement of February. Remember, we are dealing with March, but they are bringing in the past. They are bringing in the bank reconciliation statement of February. But why? Why are these guys doing this? Do they want just to wrong us? It's like they don't like us, ne? No. The reason why they are bringing it, remember, what are we finding in a bank reconciliation statement always? Outstandings. Outstanding deposit. Outstanding EFTs. It means they are missing in the bank state. So it means now when we receive the next bank statement, we must check if they are now appearing. And if they are now appearing, thank God, all is well. But let's assume it happens that something that we thought was outstanding in February is still outstanding in March. It means there's a problem. We need to investigate. Remember, why are we preparing BRSs? Why are we preparing the bank reconciliation statement? So what are they saying here? We had an outstanding deposits, 2 of them, 15,900 and 23,000, different dates. Please check that. We also had an outstanding EFT. Now, and then there was a favorable balance as per bank account. Now, let's start with this one. This amount is a bank balance. When we are starting March, this was at the end of February. So it means when we are starting March, we are already starting with the bank balance. So this goes to the bank account. Very important. But these other 3, we are going to check if they are appearing. If they do appear, sharp, no problem. But let's assume they are not appearing. Now we need to know why, and we need to deal with them accordingly. So what are they saying about this? They're saying, take note. First thing, the outstanding deposit of 23,000, this one. There's a problem, there's a story about this one. On the bank's reconciliation statement was in respect of sales. So it means we sold goods for 23,000 and the money was taken to the bank. But what happened? It was reflected as 18,000 on the March bank statement. After investigation, it was decided to write off the missing 5,000. So we took 23,000 and maybe we gave it to someone, a trusted person, to go and deposit in the bank. And then when we are receiving the bank statement, it is saying only 18,000 was deposited. So it means something happened to our 5,000. Our 5,000 decided to grow some legs and walked away. We could not ascertain where the money is. But because we are being prudent as accounting people, we are being realistic. We don't know where this money is. So we must write it off. Remember, we have already recorded it as a receipt. To write it off, what do we do? This 5,000, we are now going to write it off in the opposite journal. We are going to write it off as a payment, though we have not paid anyone with that amount. We are being realistic. If we can't find where the 5,000 is, let's be real. It's gone. It's stolen. It's no longer there. And we check also the other two. Please take note, the outstanding deposit of 15,900 appeared. The minute they say appeared, we are fine. We are not going to do anything about it because it appeared. And then the EFT 123 appeared. The minute they say appeared, sharp. Guys, we are not going to do anything because it appeared. What we want is having these appearing. If they appear, we are good. So we check other information. Provisional totals, and you know where these provisional totals are going to be taken to. They are going to be taken to our journals, and in most cases, they are going to be entered for us. Till now, we are going to enter the rest, but these ones have already been entered for us. So we continue. The following information on the March bank statement did not appear on the cash journals. Same statement, same way of presenting information. So we need to know, where do we take this information? It appeared on the bank statement, but did not appear in the cash journals. So this information belongs with the cash journals. What we don't know is whether it is going to be in the CP or in the CR. That can be done, boys and girls. You are going to see. So these are the information that we are given. And remember, this information is mixed up. There are receipts there, there are payments there. That is the reason why you are going to see that they give us additional information to explain that information. They are saying, the money that we are seeing written Western was made, it's a direct deposit by a customer or a tenant for his monthly rent. So it means this is a receipt. And because of that, it should go to the CRJ. EFT 5,900 to a creditor was omitted in the journals in error. So by mistake, we omitted it. But check here, this is a payment to a creditor. So it means it must affect our CPJ. That's how you check now. The information that we are given now, where is it supposed to go to? A deposit for 19,000 reflected on the business bank statement is a bank error. The minute they say it's a bank error, it means it must be corrected by the bank. They will rectify this on the next statement. So it means for now, we are going to take this to our bank reconciliation statement. We are moving on, guys. A deposit from a debtor, B. Benny, was a part payment of his account. So we are having money deposited from a debtor, CRJ. A debtor, debtor's control. A debit order to Baobab Insurers includes 1,500 for the owner's private vehicle. 1,500 for the owner's private vehicle. What is this? Drawings. But remember, it's a payment too, so it goes to the CPJ. So they are now telling us the information that we have. Where does it belongs to? And that's very important, and that's very good for us. Now we can be able to deal with them without problems. And then we go to information I. Information E, it says, the following information in the March 2020 cash journal did not appear on the bank statement. So it means it appeared correctly in our journals, but it's not appearing on the bank statement. So where do we take it to? Where it is not appearing, that information goes to our bank statement. And what is that? Outstanding deposit and outstanding EFT. Remember, what do we do with the outstanding deposit? Credit outstanding deposit. We even know the instruction, guys. And what do we do with EFTs? Debit outstanding EFTs. So we are going to deal with them in the respective statements when we get them. So we are now going to break it down again and deal with one statement after the other, starting with our CRJ. According to them, they are saying this information, remember the deposit by W Western for rent, our tenant, as well as the deposit by B Benny, who is a debtor, who is part paying his account. We are now going to record these. How do they appear in our CRJ? Remember, Western, are we receiving money from? W Western, 8,300. What is it? Rent income. The next amount we are receiving from Benny, 2,750. 2,750, again under the sundries. What is it for? This one is a debtor who is part paying his account, so it affects our debtor's control. Straightforward. No problem on this one, right? Now, the next other item that is of importance that we got from that extract is the interest on a positive current account balance. Please don't make a mistake and confuse between a current account balance and an overdraft. An overdraft is negative and the business is charged for that. And because of that, we pay. So it goes to the CPJ. But interest on a positive current account balance, it is money in the bank. And as long as you have got a positive balance in the bank always rewards people who keeps positive balances in their accounts. They give them interest. And because of that, we as a bank, as a business, we receive. So it is entered in the CRJ. Interest on current account, it's interest income. Interest on bank overdraft, it's interest expense. Two are different and they shouldn't be confused as the same. Now, this, remember what I said, because of the materiality, interest is material and should be recorded separately from any other charges or incomes. So it therefore means this should be recorded on its own, and it is going to appear in our CRJ as, who are we receiving money from, by the way? WW Bank. How much? 232. 232 here, and what is it for? Interest income. When all is done, we total everything from top, and we are going to get our balance. And why do we need this? It goes to the bank account. On which side? On the debit side. As what? Total receipts. Or we can just include it as sundries. Total. Thank you. Now we move on to the next statement. We are now going to the next journal, complete the cash payments journal. Now, using the same information, let's check here. There was that information that they said, the outstanding deposit of 23,000 on the bank reconciliation statement was in respect of sales. It was reflected as 18,000 on the March bank statement. After investigation, it was decided to write it off because we could not ascertain where the money went to. So it's missing. So we are writing it off. Where do we write it off? Remember, it was received. So if we don't know where it is, we are going to reverse it by recording in the opposite journal. And that's the reason why we said it should go to the CPJ. So it is going to appear in the CPJ, and this is how it is going to appear. Remember, what was this money for? Sales. And then the detail is also sales. Who is giving us this money? Sales. And then it's for sales. Now, we are also given that we have got this other information. There was a debit order to town council for water and electricity, and this was 3,200, together with an EFT payment to BB Traders. Remember, they said BB Traders is our creditor, and we are making a payment to them. So how is it going to appear in our CPJ? The one on BB Traders, we are going to show the details. BB Traders, 5,900. What is it for? Creditors control, because BB is a creditor to us. In the debit order to town council, we indicate who are we paying, by the way? Town council, 3,200. And what is it for? Water and electricity. Straightforward. No problems on that. So we move on to the next. We are also given this information which should be taken into our CPJ. But remember that separation. Now, these items here, they are referred to as what? Bank charges. And if you can check, this time there is no interest as a fourth factor there. If there was any interest on overdraft, we were going to make sure that that interest is indicated separately. In this case, these can be combined to make bank charges. And we are also having an item here for insurance. But remember what they said about this amount of insurance. They said out of this, 1,500 is for insurance on the owner's private. Can you see that? Now, it therefore means this 1,000 that we are going to take from there, it is going to be referred to as what? Drawings. So let's see how it is going to appear in our CPJ. The first three, we add them together to make them one total, which is 1,112. And this is going to be recorded WW Bank, and then the amount appearing twice here. And then what is it for? Bank charges. Remember, interest is not a bank charge. Interest is not a bank charge. I will repeat it again. Interest is not a bank charge. And then we go to the one for Baobab Insurance, 6,600. We separate this amount to 5,100, which is insurance for the business. It's a business expense. But the 1,500, it is drawings because we are paying the owner's personal expenses. Now, in the end, when we combine everything, our CPJ is going to appear like this. What is our next step? Totaling it from the 48,000 that appeared first up to the last amount. So after that, we total everything. When it's totaled, there we are. This total, it is going to be taken to the bank account. And remember, on which side? On the credit side. Always. These are things that we should always be able to do without even thinking, because these are mechanical movements. In other words, we do them the same way over and over and over again. Now, after having the CRJ and the CPJ, what is it that we should do next? We are now going to be preparing our bank account as instructed. So let's go to the bank account and see what it is going to look like. The first thing that you need to take note is they are saying there was a favorable balance in the bank account. So that's the first thing that you bring down, the favorable balance. Because it is favorable, it is now going on to the debit side. The first activity, you could still remember, it was unfavorable and we took it to the credit side. This one is favorable, and because of that, we bring it down on the debit side. Very important. Now, what do we do next? We are going to transfer the figures that we got from our journals. Remember, from the CRJ, we had 60,282. From the CPJ, payments, it is 69,812. Now, when this is done now, we are going to check. Remember now, on the debit side, we now have two amounts, 11,400 and this. And the other side, it's only 69,812. And when you add this side, you can see it's bigger. The debit side is bigger than the credit side. So we are going to use the total of the debit side. So we add these two amounts and we get 71,682. Because that's the bigger total, we use the same total on the credit side. And then we enter that. Because now we are already having 69,812. What is the missing link now? We say 71,682 minus 69,812, and it's going to give us 1,870. This is just the bridging amount, the amount that allows us, when we add these two, we are going to get the same total as the debit side. And remember, it is also being brought here as the brought down. And it means we are having a debit balance because the brought down is on the debit side. This is the debit balance. Now, where do we take this figure to? Remember, that's the figure that goes to the bank reconciliation statement. Very important. It goes to the bank reconciliation statement. So it means we must go and prepare the bank reconciliation statement. Let's just check the balance as per bank account. Okay, let's just start from the top. Now, they are not giving us the balance according to the bank statement, so it is still an unknown figure. What do? We credit our outstanding deposit. By crediting, what are we doing? We are recording on the credit side. Then you can see, because they said credit, we are just following an instruction. Now, what do we do with the EFT 222, which is 6,600? This one, it also did not appear on the bank statement. So it is an outstanding EFT. So we have got an outstanding EFT number 222. Now, this is appearing. Why on the debit side? Because the instruction is debit. So we are just following what they are saying we should do. That being said and done, we are going to look into that error. A deposit of 19,000 reflected on the bank statement is a bank error. The bank will reflect on the next statement. So it means it's not money into our account. They deposited by mistake. So the only thing that they should do is to withdraw that money, to take it out. So how does it appear now? Check here. If it's a deposit, it is credited, right? So now it was credited by mistake. To correct it, we are going to debit. We do the opposite function. Is that okay? The balance according to the bank account. I mean, we are dealing with this 19,000. The amount wrongly credited, that's the 19,000. The amount wrongly credited. So we deal with it now by recording it on the opposite side. So it's recorded. After that, we bring down the balance according to the bank account. Remember, it appeared on the bank account as debit. And because of that, we just take it to where it is. So it means we have got a positive balance of 1,870. Now, if you check, on this side, we only have got one figure. And on this side, we are having three figures. When we try to total, we can see the debit side is bigger. So we are going to get 27,470. That is the same amount we are going to also record on the credit side because the total should be the same. The total should be uniform. So it therefore means we are going to record it on the other side. So there it appears also on the other side. Now, if it's appearing as 27,470, but when we check, we only have got this figure recorded so far. What do we do now? We say 27,470 minus 17,400, and we are going to get 10,070. Now, this is our balance, and we got this as a balancing figure. Can you see what's happening there? Straightforward. Balancing figure. So there we are. Done in preparing our bank statement. Now, I want you to see what we have dealt with in these two activities. Now, one, there is a format when it comes to the bank reconciliation statement. We always start with the balance according to the bank statement. Always. Balance according to the bank statement. And in most cases, this figure is not given. It's given as a question mark. But you are going to see sometimes they are going to give it to us. Now, they give it us as either a debit or credit balance, which becomes easy because we are just going to enter it where it goes. But sometimes they are going to give it to us as favorable or unfavorable. Remember, when it comes to this, when it is unfavorable, it appears as debit. When it is favorable, it appears as debit. So always check, are we dealing with a favorable amount or we are dealing with an unfavorable amount? And then they are going to give you information that they are going to say it appears on the cash journals but not on the bank statement. And we call these outstanding amounts because these amounts are either received by the business and they are on their way to the bank in case of deposits. And then it can be an outstanding EFT. An EFT effected and recorded as a payment in our CPJ, but not yet reflected on the bank statement. Then it means it's an outstanding EFT. Very important for you to be in a position to remember this. Now, these amounts are recorded. Credit outstanding deposit for outstanding deposit. Debit outstanding EFTs for outstanding EFTs. That's important. And then the next thing that you need to watch out is a mistake that has been made by the bank. It's not a deliberate thing, but the bank made a mistake. Now, when a bank has made a mistake, it must be corrected in the BRS. A mistake made by the business in the journals must be corrected there in the journals. But a mistake that is made by the bank is corrected in the BRS. So we check what type of mistake. It's money deposited by mistake into our account, or it's money withdrawn by mistake out of our accounts. I think I like more mistakes when money is deposited into my account rather than when money is taken out of my account. Anyway, whether it's deposited or it is withdrawn by mistake, the bank always promises to rectify, and usually we see the rectification in the next bank statement. But for now, we are going to correct it on the bank reconciliation statement. Very important. Now, when it comes to issues of the CRJ and the CPJ, we already have information recorded there, but there are some items that appears on the bank statement. By the nature of these transactions, we can never be able to record them in the CRJ or in the CPJ before we receive the bank statement. Because check debit orders, it's an instruction to the bank to pay on your behalf. But have they paid? So we cannot say because I instructed them to pay on the 15th, when the 15th arrives, I also record as if I've paid. What if they forgot to do it? What if it's not done? What if there were no funds in your account to make that payment, so the bank failed to do it on your behalf? So we need to wait for a source document. And the source document for this type of transaction is our bank statement. When we get our bank statement, now it is our duty to check those items that are appearing on the bank statement which are not appearing on our journals. The same applies to issues such as a direct deposit. A debtor is having money now. Instead of coming with this money to the business and making a payment so that we can be able to issue a receipt and take that money to the bank, they just deposit directly into the bank account. And in most cases, they are not going to also call you and say, we have deposited money. You wait until the end of the month. When you receive your bank statement, you check. You see, oh, this Dube have paid us. Oh, Check Mkize also paid us. So when those have made payments to us, those are direct deposit, we must now take those and record them in our CRJ. So we need to update the journals. We need to update the journals. And having new totals, we transfer the totals to the bank account, have a new balance. After that, now we are having enough information to take to our bank reconciliation statement. In short, that's the reconciliation process. Update your journals, prepare the bank account, and then transfer the balance to the BRS in preparing the bank reconciliation statement itself. Very important. Now, we are moving on to the last aspect of today's lesson, where we are looking into issues of internal controls when dealing with bank or when dealing with cash. Now, one thing that we must take note is, whenever we are dealing with cash, it is the duty of the business to ensure that deposits are done on regular basis. I would want to say cash should be deposited daily. And when you look into big businesses, cash is deposited even more than twice a single day. That's the reason why when you get to the malls, at some point you are going to see those guys with guns and carrying very heavy bags of money from businesses. They are doing their banking at that time. So they are making sure that they have got limited amounts of cash on the premises. We should not be in a position to forget that human beings are dishonest. And when they see money lying around, they are bound to want to take a little bit of it. So make sure cash is always banked, taken to the bank. The business have got very limited amounts of cash. Now, when dealing with cash, we need also to rotate the duties and times of bankings to avoid creating a problem. Money should not be taken to the bank every day at 10, because robbers are also checking and they're seeing, oh, that's what they do. We are going to pounce at 10. Provide security when going to the bank. At least 2 people should go. That's avoid situations whereby we don't know where the 5,000 went to. You still remember that 5,000. 23 was taken to the bank, but only 18 was deposited. We cannot say where the 5,000 went to. It's because we are only having 1% to the bank. Divide duties. The persons who receive cash cannot be the same person who banks or prepare financial records. When a same person is doing everything, they are bound to start wanting to be naughty. Division of duties is the solution. Use the collection companies to collect cash on a daily or on regular basis. Usually that's what modern businesses are doing. Let them come and collect cash, because once it is in that truck, it is insured. And it means when anything happens to that cash, it's not yours being stolen. Check documentation receipts against deposit slip. Check if you are sending 20,000, check if it arrives at 20,000 at the bank. Senior personnel should check via internet banking or deposit slip that deposits are reflecting. When you are sending money by someone or one of the employees to the bank, make sure it's appearing, because you may not know that the money is disappearing on its way to the bank. Request SMS notification from the bank for all your transactions. This is now modern practices where your bank tells you what's happening. Your phone tells you what's happening with your money in the bank. By doing such, you are in touch with all the things that are happening in your account. And if there are any things that you don't understand, you raise a query directly and on time, and your money can be safe. Thank you for being with us in this lesson. This marks the end of this lesson. Until we meet again, thank you.